Welcome to GoldenCare's webinars here. My name is Jeff Clark. I've been a regional director here with GoldenCare for, I guess 16, 17 years now, and been in long-term care since 97. So I guess that puts me doing this for about 24 years, I suppose, at this point. Today we're going to be going over the missing link in your financial plan. It's our consumer presentation for the long-term care, the consumer out there. How to sell it. So when I'm going through this, we're going to kind of treat you guys as the prospect. And so I'll kind of roll through the presentation, kind of pausing to kind of let you know that on this slide we're really trying to emphasize this point, or on this particular slide here's the things that we're trying to point out. And just remember that this is kind of my take on this presentation. I can tell you, just to tell you a little bit about myself, I guess, who's speaking. I have used variations of this presentation over the years. This is actually originally written by Mark Randall, the legend Mark Randall, who's done so much training for GoldenCare over the years. And so this presentation has been used for at least most of my career, for 20 plus years. And it's different versions, and it's changed with the times. It's been added to, taken away from. But I can tell you that I've given this at least 700 times or more over the years. I've personally written over 500 long-term care policies in my career. Going back to 97, I spent 97 to 2001 selling long-term care in the field. I cut my teeth on long-term care. A lot of agents start with other products, and then I got moved to the director position where we recruit and train and help people write more long-term care. And so once in a while, we do a lot at the GoldenCare level at products. We like to tell people about, all the great products we have, when they fit, when they don't fit. And, sometimes we look across the very basic. We first of all, we have to create the need and get people to buy a product, to present a product to them. So we're kind of backing up a little bit, saying, maybe we should give our brokers, our agents out there, a little help with how to sell long-term care. So that's kind of the emphasis behind this. We haven't done this since last July. And so again, I only get to give this presentation now about once or twice a year, as I probably write as little as 5 or 10 policies a year at this point. But anyways, without further ado, looks like, good. I gained another 12 people there in that introduction. So we're going to go ahead. The questions we're going to have typed in, and I'll try to get to those at the end. I won't actually have those showing up front. So I'll go ahead and answer the questions the order they came in at the end of the presentation there. So I would say kind of let the presentation bear out. They might be answered a little bit further down. But timing, right now for long-term care, let me put this on presentation mode. I got a couple slides I'll switch out of that. Let's go to, all right. So what a perfect time to be selling long-term care. Now, I don't want to say it. I've told agents, colleagues around to the office here that, I don't want to call this the opportunity because, COVID's on everyone's mind. But I want to take a step further. There's almost like an obligation we have as agents to our customers right now that they are fearful of going to a nursing home. They're terrified of COVID. A lot of seniors, we talk to them. And, matter of fact, at this point, it drives 61% of people surveyed say they'd rather die than go to a nursing home right now. I'm seeing this in my own block. I do, Medicare work and whatnot, and I have a lot of clients on the books. And I've had 3 clients in the last 6 weeks just call me out of the blue, Medicare clients. I haven't spoken to these people for, I bet you, 3-4 years, saying that, they're really concerned about the nursing home. I had one of my clients, he's 66. He says, Jeff, I'm nervous that if I have a stroke, I don't think I'm going to die from the stroke. I might end up in a nursing home for 6 months, but what if I get corona? I'm in there for 6 months. So he's actually more afraid of the nursing home than he is the stroke. So, it's just some more stats here on this. Those, if you're being cared for right now, I don't know, maybe you've had a stroke or you've had some cancer or you've broken a hip or a leg or had a health incident that requires some care. If you're getting that care at home, you are 3% of 3% likelihood of contracting COVID from that care from the people, and you have a 1% of dying from that. Now, conversely, if you're in a facility receiving that care, 37% of people are going to contract COVID and 11% are going to die. So there's a warranted fear of going to a nursing home right now. In other words, I have a 10 times more likelihood, 11 times more likelihood of dying if I receive my care in a nursing home. So I'm not trying to use scare tactics by any means. There's almost like a moral obligation in our part to help people with this concern. So I just can't think of a better time to be talking to your clients, to be proactive. Think of the folks again that are just sitting there. Maybe, maybe if you are a Medicare person, it's post AEP. The dust has settled on those, and I know some people are working the OEP angle. But what a great time to kind of rally back and maybe send out a letter. GoldenCare can help you put together. We've got a lot of prospecting lectures here we could dust off and tailor to whatever you're looking for. But what a great time to bring out the need for long-term care. Another stat here. You'll remember here last spring, about a year ago, or I guess it was about 10 months ago, that over in the East Coast there, we had 22,000 deaths in a nursing home in a 3-month period in just Connecticut, Massachusetts, New Jersey, New York, and Pennsylvania. Mainly, Jersey, New York, and Pennsylvania. But do you remember when that story broke? That was a huge number too of folks. So anyways, before I started this, I wanted to make sure that everyone out there is fully aware of what's going on in this market right now, and that people are desperately looking for, solutions to this nursing home assisted living facility thing. So, keep that in mind. And we actually are putting together we're calling it a coronavirus marketing pack to kind of speak of these things that you're looking at right now, kind of being cute, but mainly just to kind of keep in your mind saying things like, what are the underwriting ramifications? What are some of these stats here? How is it affecting our marketing? How is it affecting the costs at nursing homes? Because I know the nursing homes are experiencing extremely high costs because of all the preventive stuff they have to do for corona, which is driving, most of these nursing homes are on the brink of bankruptcy as it is, so it's going to push them over the edge. It's just corona really has a lot of ramifications, I guess, in our industry. So we're going to try to put together a marketing kit, if you will, that will kind of help you guys take advantage of that. So, all right, the missing link. And again, I'm going to back up here. I'm another story, and I promise you we'll get rolling on this. But this is me personally selling now. I'm going to take you folks that are on board here. I'm going to take you through the sales process of how I saw it, or et cetera. Now I'll take this from the author, Mark Randall. He did the same thing here, and I saw him give this a couple times actually, and I loved the story part to kind of set the table. And take this for what it's worth. When I started a presentation, I had a group of people or the individual across from me, I would tell them about the aging of America. The fact that in this country right now, if we were to take every single nail, every 2x4, every piece of concrete, and we were to devote every building material to building nursing homes, if we were to take every carpenter, masonry, roofer, framer, and all they did, they're going to stop building roads, they're going to stop building hospitals, they're going to stop building all housing, anything they're doing, and we're going to concentrate every bit of raw material in this country and every single labor force person that makes houses, builds things. We're only going to have them build nursing homes. That's it. Nothing else. If that were the case, we would never be able to make enough nursing homes to house all the people that are coming to be cared for the next 20 years. It's a tidal wave that we can't even get our minds around. We are simply running out of able-bodied caregivers and places to put these folks. So this is why you're seeing things out there in our landscape. Like you look at your Courtyard Marriotts and a lot of the hotels, the Staybridge Hotel for the Holiday Inn, all of them have their different style of hotel. You'll notice there's not high rises anymore, where you walk into a hotel room, it's just 2 beds and a TV. A lot of them are gone to these like 2 or 3 level where you've got like a little living room inside your unit. You've got like a little refrigerator and a sink, right? Why is this happening? Well, because all of these hotels are going to be converted into assisted living and nursing homes to take care of this tidal wave. Yes, cruise ships are being turned into cruise assisted living facilities because they've already got doctoring, they've got laundry, they've got a food service. So we used to kind of joke about the Carnival Cruise Lines, but this is really happening. We are just trying to find a place to put all these folks. So the fact that we have no place to put them and we're running out of able-bodied caregivers to take care of them means that really there's a huge need to be looking at long-term care. What's your plan? In lieu of an overstressed, overburdened society, you better kind of start taking care of this on your own. I'll get into the financials of Medicare a little bit later, but just for the pure reason of it, we're running out of places to go. So you really do have to think of your own care as your responsibility. Okay, so what is it we're doing here? The agent's role. So I'm sitting down with a client. I want to make sure that I understand the industry. I want to understand the ins and outs, the different legislations going on. I got to research the companies. I have to know the different policies, the different styles, whether it's a hybrid long-term care, life and long-term care, pure traditional long-term care. Maybe it's a home care only because of the health problems, etc. I'm going to represent multiple carriers, multiple plans, so I can fit whatever it is that this individual across from me needs. I want to have as much as knowledge and understanding of the industry and products as I possibly can. Okay, I'm doing their shopping. Steps in the process, I'll explain to people that, and this is the big one here, can you qualify for long-term care? I'll just kind of pause there for a second. I always tell agents, look, don't go into this huge, long presentation only to find out that they've got, onset of Parkinson's or emphysema, or, they've got a touch of this or touch of, so at some point, and that's another maybe whole topic, but, you have to kind of be able to realize to pivot out of a full-blown long-term care sale, maybe realize it's going to be a home care only, or, okay, so we want to see if they qualify. We also want to see if they need long-term care coverage. That's more about the suitability financially. We're going to educate them about what long-term care is. Then we're going to design an affordable plan for them, and then we're going to try to start the process for them. And I always told people, look, we can't sell you long-term care today, but we can at least start the process. We can get an application and see what's going on. So let me go through these kind of 5 areas here, steps of process. Okay, so again, qualifying. I ask a couple questions. Have you been hospitalized the last 5 years? Tell me about it. Are you taking any prescriptions? I kind of tell them right away, is there anything major I should know about? I mean, have you had any strokes or had any cancers recently that you're maybe still just not quite behind you? Or you got any physical therapy going on right now? Like, did you have a knee replaced recently? Or, I do ask some health questions right away before we can start qualifying. So I want to know that, because maybe at this point, I may be pivoting to at the end of the presentation, I may be offering a different product. Okay, in other words, based on what they kind of told me here, I'll still go through and create that need, but it might be like a critical cash plan or a home care only plan at the end. So that's part of what you're doing when you're qualifying your client. Ask some health questions. Let them tell you about their health. Now, secondly, we want to do, suitability. Do they need to have coverage? Now, state law is going to require that we as agents go through I'm not always agreeing with how the state lays it out, but they want to know these people are suitable. There's a certain level of income and assets that the state figures you should have before you should be buying long-term care. Personal goals, a need for coverage. I personally look at some of that suitability stuff, and if they were, some people were, the suggested levels. If you only have, 200,000, some of those levels I'm not always agreeing with. I'm always a big believer that the less you have, the more need for long-term care there is. What the state does is they're taking out, they're saying, well, then you shouldn't buy coverage because the state's going to take care of you. And I always kind of argue that I've had people that say, yeah, I know the state's going to take care of me, but have you seen the state's coverage? And it's getting worse. So even though I'm maybe not suitable in the eyes of the state or the government levels, there are forms to say that I still want to throw, $50, $60 a month, that it's something decent so I can have some home care and not burden the kids still. So anyways, the law requires you go over suitability with them, so we kind of know where they're at financially. And from that, we decide their income and assets, and we kind of set some goals from there. Then we explain to folks that, your health insurance doesn't pay. There's a common misconception out there by the consumer that long-term care services are going to be covered by your existing health care. Whether it's, they're under 65, or when they eventually then get to Medicare, they're thinking, well, Medicare is going to cover this. And the reality is, I think most of us know that, Medicare only pays for the first 100 days. And actually in that first 100 days, there's not a lot of great stats on this, but in order to get coverage from Medicare, you've got to have what's called a Medicare triggering event. So in other words, I'm 74 years old. Everything's been fine, but with old age, I'm just starting to get a little bit, I can't tie my own shoes. I can't, I kind of live a hard life. I just, for whatever reason, I need care. Now, if I have a stroke and I'm in the hospital for at least 3 days, and I check into a hospital within 30 days, I'm going to be covered by Medicare. But if I'm, again, just getting old and tired and I need to go to a facility, there's no coverage for Medicare. So when I explain to folks that basically you're covered for the first 100 by Medicare, as long as you have that Medicare triggering event, a stroke, cancer, a heart attack, or something that's going to, I fall and broke your back, or so these are again, this is how the health insurance works, but you don't have much help in that first short term. So long-term care plans, again, are going to be for the long term. They're going to start kicking out in 90 days. So I do want to make sure that people know that right now, even with your existing health insurance or future Medicare, don't have any help in that first. You have some help in the first 100 days, but after that, there's nothing helping you. You're going to have to kind of take care of this on your own because they're only going to help you that short term. Okay. All right. So why is it an issue today? And this is kind of goes back to the story I just told you. There's an amazing aging of America going on right now. 10,000 Americans turning 65 every day in this country. Our first baby boomer turned 65 in 2011. Between 2007 and 2030, our over 65 population is going to go up by 90%, 100%. It leads back to the story I told you to start. I think stories sometimes are better than stats. It's just my selling style. But, we are aging and we're running out of able-bodied caregivers to take care of them. And I'll say it another way. If I look at the Medicare system, in general, because Medicare is supposed to be the first level of pay. They pay those first couple, 3 months of stuff. When Medicare was written, there was 11 workers paying into that system for every one recipient. Well, look at how we are structured today with so many folks not working, so many more people on Medicare. It's down to 2 workers for every one recipient on Medicare now, 2 to 1. So this thing was written with 11 workers paying in for one recipient. And the recipients, by the way, now are using twice the benefits they used to 20 years ago or 30 years ago, in the 60s when they wrote this thing. So you just have a system that's extremely overburdened. You've got this aging population coming in, no place to put them, no money to take care of them. So the whole thing of I'm going to let the government take care of me, not such a good plan when you have a government that's going to be completely busted here in not too long. Not trying to scare people. Again, this is just the reality of it. So this slide here is why is it an issue? I like to make sure that I paint the picture of don't count on the government for any help because they're broke. And I know that when I used to sell, I guess, in the field, I'd get a lot of these folks that say, look, my brother didn't have long-term care and he went to a nursing home and the state took care of him. And you know what? That was kind of commonplace 10 years back, even 15 years back, because the Medicare money was huge. I mean, Medicaid and Medicare were funded very well. They had deep pockets. So they may have allowed like an illegal transfer of a house to a kid, or they may have allowed, they didn't attach like some of the farmland or some of the assets that this person had. They went ahead and just qualified them for help from Medicaid without being, well, guess what happens when the money dries out? Now these counties, these Medicaid workers, these social workers have to really be vigilant in attaching all assets. So all these loopholes and stuff are kind of gone. Matter of fact, the legislative changes have kind of changed our landscape. So, in 2002, the federal government started offering long-term care to 22 million employees. They started giving tax incentives for long-term care. If you purchase long-term care, we're going to give you some tax deductions. Even individual states got involved, giving you a state. In a lot of states, you have a state deduction for long-term care, and you have a federal deduction. They launched the Own Your Own Future campaign. This was more or less a huge campaign funded by most states, the federal government in combination, to give every single person, like in the state of Missouri, for example, every man and woman over age 50 received a letter saying, basically, we are broke. We're going to be more broke. You need to take care of your own future. So why does the government offer to a federal employee? Why are they offering the tax incentives? The government knows they can't afford to take care of all this tidal wave. They can't. The numbers just aren't there. The government is very pro long-term care. This is why you see things like this being done. They're trying to push every incentive for people to buy it because they know that more people that pay for it privately through insurance, et cetera, it's less people they're going to have to pay for or be dependent upon. So the other thing is the Deficit Reduction Act of 2005. Now the Deficit Reduction Act here, I got to just touch a little bit more on that. This was sweeping legislation that really kind of tightened some of those loopholes you heard about. Sometimes when you talk to a customer, I'd have a guy that sit there across from me. He's got, a 1,600 acre farm, and he's got all the farming equipment, and he says he doesn't need long-term care. And I said, why is that? I go, well, because my lawyer had me sign up this trust that says that the state can't get it. I can hide this stuff. There's a 3-year look back period. There's a 5-year look back. Listen, the Deficit Reduction Act more or less has, teeth that says, I don't care when you transfer stuff. I don't care what you did with some lawyer. They're frankly not going to let you put $1 million into some account and let a person who has $1 million, a millionaire, go on welfare anymore. It's just, yes, they used to do this stuff back in the day. And again, personally, when I sit across from someone, I'm kind of saying, Medicaid was supposed to help out the truly needy and impoverished. I mean, here's a millionaire looking at me saying he's so proud of himself because he's transferred his stuff into some trust or tried to hide it from the state. And so, fortunately, those things are. This is what the Deficit Reduction Act did: is it eliminated some of those loopholes. It also increased those penalties for trying to transfer them, but it also authorized state partnership plans. So now the states were getting involved, saying, "Look, if you buy long-term care, we're going to match whatever you buy in benefits. So we'll pay you that. We'll allow you to keep that much in your assets and not be spent down to Medicaid levels." So that was huge. So in any given state, for me to qualify for any state help, I've got to be spent down to $3,000. So Deficit Reduction Act said, look, there's partnership plans. So if you were to go ahead and buy, I don't know, $200,000 worth of long-term care insurance coverage, and you exhausted that, and then you ran out of money, we're going to let you keep $200,000 in personal assets as your new threshold, your new spend down level of $3,000, and you're still going to get help from us, but you can keep $200,000. Thanks for buying that $200,000 of coverage. The state does that because they know that 90% of people aren't going to go beyond that $200,000 worth of care. So they know it's going to help most folks. So they're happy to go ahead and give you a partnership plan. So these are all great things that the Deficit Reduction Act did. The government's very pro this. It's because it's becoming a huge problem. We don't know how we're going to take care of all these folks. So that's kind of your job as an agent, is telling people that the future is bleak as far as getting care from the government, hiding assets, trying to do it. So the right thing to do is buy long-term care. Okay, another misconception. Everyone always think this is old people insurance. This stat actually, when I first started doing this, 25 years ago or 20, it always surprised me too that 44% of people who need long-term care are under age 65. 56, of course, then be older. Where is this care provided? This one I think we all kind of know. This is pretty, and this is where most people want to be, right? But 84% of people who are receiving care out there are at home. Okay. So, that makes sense. That's where most claims start. Family rallies around trying to keep people at home, right? So this is where care is provided. What causes long-term care? Well, there's two main causes for long-term care: acute needs and, of course, chronic needs. I'll get to there next. So acute needs. This is talking about cardiac arrest, hip fracture. Obviously, the major things, go to the hospital and suddenly I'm going to find myself in need for long-term care. And with Medicare, again, the cutting back of Medicare, these DRGs that they're speaking of in this slide. Now, this is one of these slides that, again, I'm just going to go off menu here, off script. This slide seems to get a little deep, and I'm going to explain it to you. But this really kind of lets that person sitting across from you know that you know what you're talking about. So Medicare uses these diagnostic related groups, DRGs. If you don't understand what those are, let me try to explain them to you. So in other words, Medicare has a DRG, or a diagnostic related group, for every health condition known to man, whether it is a cardiac arrest or a hip fracture or they're gonna reimburse Medicare or the hospital for 6 days or for 3 days. So this is another reason why I tell folks, and they already know this, they're not keeping folks in the hospital very long anymore. They're going to move you out of that hospital and get you to a rehab center, nursing home facility as quick as they can. Sometimes these nursing homes, rehab centers are connected to the hospital. They're just a different door. You get pushed through one door, you go to the hospital a little bit, and you get pushed through another door. Now you're already in the nursing home. So the fact that you're going to be moved from the hospital, because hospital, this is kind of an interesting thing. So cardiac arrest is a 3-day DRG. Hospitals are really in a tough spot when it comes to Medicare. So if someone hits their door and has a heart attack, and they know that it's a DRG at 3 days, that means that Medicare is going to reimburse that hospital for 3 days of care for that person who hit their door. Call him Mr. Smith. So Mr. Smith comes in that hospital. Let's just say, just for easy math, it's $1,000 per day to be in a hospital. That hospital knows that they're going to get reimbursed for 3 days or $3,000. If they're able to get Mr. Smith healthy up on his feet, slap him on the back, and get him out of that hospital area billing within 2 days, great. They're going to be plus $1,000. Problem is, the hospitals can't always do that. Sometimes there's complicating factors, and pretty soon the guy's in there for 4 days, 5 days, so they go in the red in that one. So hospitals are constantly battling with these DRGs and trying to get people out of the hospital. And so when I hear people say that I don't need long-term care, I'm not going to need nursing home care, they're just kidding themselves. This is all part of the thing. And so these acute needs, people are going to need long-term care. And again, all these DRGs, all that means is that they're going to move you away from hospital care as quickly as they possibly can. Because the hospital doesn't send the money back when they save it, but they get billed it if they're over. So it's a juggling act. And so, yes, you're going to find yourself in a long-term care. The second thing is the chronic needs. This stuff's probably more people think about this, but your Alzheimer's, dementia, your osteoporosis, your diabetes, your strokes. So, this is what causes people to now need care for an ongoing situation. And this is where I usually kind of pause and I ask my clients, do you know anyone that ever had Alzheimer's? Do you know someone that had chronic osteoporosis or had a stroke and ended up in a nursing home? And you know what? I just, at this point, I just let the clients tell me, yeah, my aunt, my sister, my brother, my parents went through so much money in the nurse. And normally, actually, when they're sitting across from you, they've already had a reason to be calling you. So I kind of also flush that out in my introduction. I want them to tell me, why, what's they're thinking, and why they're looking at long-term care. So here are the odds. Every long-term care presentation has to have it, and I think we all kind of know this at this point. 70% of people over age 65 are going to require some type of long-term care. Women are especially at risk. 79% of at age 65, they have a 79% chance of needing care. I've seen other stats where 80% of new admissions into facilities are women. I know it because I had my dad in an assisted living facility recently, and when they'd sit in the main rooms, it was mostly women. Here's an interesting one, and this is the one that I usually harped on a lot when I sold and talked to folks. Is that when you're a married couple, there's a 90% likelihood that one of you are going to need care. So this isn't a question of if, right? This is way beyond if you need care. I always told my people, when you need care, how are you paying for it? I didn't say if, ever. So when Ma goes to nursing home or dad, so what's your guys' plan? Or when he has that stroke and now he's being cared for in the back bedroom and you can't lift him into the bathtub or you can't do the therapy for him, what are you guys, is your daughter going to quit her job or is she moving in with you or what? And so I was probably a little bit frank with folks there. I had no problem talking about this because I think it's an unpleasant thing, but these are just the pure numbers. Long-term care is never a question of if. It's when it happens, how are you planning on paying for it? Again, in lieu of what I just told them, remember, I told them how overburdened the system is, that if your plan is to depend on the government, you may have a problem, right? Okay, so what's the average cost? So when you go to this nursing home and the average cost is $255 a day or $93,000 a year, you can get assisted livings here for $50. It depends on where you live here. These are averages. But here like in Minneapolis, my dad it was right around $4,300. Yeah, it was about $51,000 a year. So that's pretty close. Home care can be every bit as expensive. Some people have this thought that home care, full coverage home care, where you've got a regimen of nurses coming to the house, basic nurses to do bathing, dressing, maybe some laundry, grocery shopping, and then you've got a physical therapist coming in to do something for strokes, or you're going to look at $50,000 a year. So these are averages. Can you go buy on less than this? Yes, of course you can. And I always ask people, how long can you afford to pay the $50,000 a year? I mean, and they kind of look at you like, not very long, right? So these are just costs. So we got your odds, your costs, and then who's going to pay for this? Again, this is a misconception that the government's going to take care of me. Well, in reality, right now, 43% of people are being paid for the government because they didn't plan, right? But there's still 1 out of 5 people are paying out of pocket, or the private health. You say 1 in 4. Quarter of people either have the funds to pay for it themselves or they bought the insurance. Okay. Medicare, remember, this is post-acute care. This is for folks who just had that stroke and maybe they're going to need care for 40 days, 50 days. When it gets beyond 90, of course, then we go to that chronic. Then it goes to, so 2/3 of people are being paid for by the government. That can't continue, right? There's more coming. At some point, that's going to bust the bank. So, who's paying for this right now? The government. They can't continue to do this as a tidal wave of care comes. So there are really 3 ways to pay for long-term care. And I love this slide. This has been there as long as I can remember doing this thing, even back in the 90s. There's 3 ways. Be very rich, be very poor, or be insured. Going back to the suitability slide that I talked on earlier, there's really a donut of people that need long-term care. If you're already on welfare, you're living in subsidized living, you have, your income is 10,000 or less. You're dual eligible, for Medicare and Medicaid. You pretty much you aren't paying for any premiums. You don't have anything to your name. then you're not going to need long-term care. Okay, I'm not going to now. Some people will say if you have $2 million or more, you can self-insure. I'm even worried about people with $1 million. If you take a $500,000 hit or a $600,000 hit, but a lot of people overlook the people with like $200,000. I say it this way. So you're telling me that someone with only $500,000 or only $200,000 of net worth doesn't need long-term care because they're going to fall in the state so quickly. Let's just say the average long-term care hits, is going to cost the family $250,000, $250,000. Then I would always say that the family with only $250,000 probably needs it more than the family with $1 million. If I only got $250 to my name, I don't want to lose $250. So I kind of feel like there's once you get over $1 million, $2 million, you can afford to lose, $500,000 if you have 3, 4. So there's kind of really a donut of people who need it. It's the people who are just above the Medicaid level. It may be not quite worth $2 million. Okay. There are only 11 million millionaires in this country. So that leaves, I don't know what, 300 million non-millionaires. So it's still a lot of folks to sell. But yeah, if you're very rich, you probably don't need it. If you're worth, your net worth $3 million or more. If you're very, very, very poor. But everyone else in the middle there, which is most people, need to be insured because they're either going to take all your money, you're going to be poor, or you need to be very rich. So this is the 3 ways to pay for long-term care, plain and simple. There's no more transferring, hiding. So think of it, and this is another great slide. This is actually, I believe, done by Mark's brother Tom, but this is really a great slide to kind of drive that point home. The walls around your estate. So people out there buying, this is another way just to make people see it. People have insurance for their car. They have insurance for their RVs, their toys, their boats, their house, right? So, but what are the odds? So fire or tornado, homeowners insurance, that's a 1 in 1,200 chance. And let me see these things fill in as I do this. So people have car insurance, auto insurance. They have, in case they have a heart attack or major health, they have that covered. So long-term care, you pay for it. Do they have the odds? Yes. So look at these odds now. Love this slide. The chance of your house burning down from a fire or tornado, 1 in 1,200. But people insure that. Now, a lot of times I know you have to have insurance when you're buying a mortgage. I get that. But even when people's houses are paid off, nobody goes without fire insurance or tornado insurance or homeowners insurance, right? Even though it's a 1 in 1,200 shot, no one goes without it. Car accident. Even though a car is paid off, and I know that states require you to liability, but a lot of people have full coverage on their cars. That's a 1 in 240. Okay. The chance of having a heart attack or a major medical emergency that costs you out of pocket $10,000 or more, that's a 1 in 15 shot out there. But look at down here at long-term care. This isn't like a 1 in. This is 3 to 4 people are going to need it. And it takes your car, your house, everything, your retirement accounts, everything. It's one heck of a tornado and fire. And it is by far the most likely thing to be happening. It's coming right down the road. It's going to hit you right in the face, and you're doing nothing about it. So I do love this slide. It just kind of puts it in perspective. You're insuring backwards. Like if I'm insuring myself, I want to take care of the most likely thing that's going to wipe me out first, then the second most likely thing, then the third. But we're backwards. We've got the most likely thing that's going to take all your stuff from you is the one thing we're not insuring. So I would say that's interesting. But okay, next slide. So why do people buy long-term care? And I always had agents that tell me, you're going to lose all your money. You're going to lose all your money. That's not a hot button. A lot of folks have kids and they would like to see their money go to their kids. But a lot of kids are doing good. These old people, some of the old folks that I talk to are the older folks that are saying, look, my kids are, my kid's making more money than I ever made. He's making 6-figure income. They're not worried about saving the money for their kids. You know what they're worried about? They're worrying about going to some crappy Medicaid nursing home where, Corona's running rampant and they're going to get killed from it. Or being shipped to some place because they're on the government plan in the state, because now they don't get to pick where they're going. When you're on the state plan or Medicaid, you might want to stay in your area code, your zip code, but if they've got opening beds somewhere over here an hour away from you, that's where they're going to put you. Because again, you're not going to have any choice about who's caring for you, where you're cared for, how much care you're getting. So that is important. That is the hot button. That's what you should be selling your clients on, is choice and independence. Second reason people buy it is they don't want to burden those kids that have full-time jobs. Maybe they're coaching sports. Yeah, I can just use my own personal experience. I took care of my dad. He died last winter, but the 3-4 years before that, I was pretty much a hands-on caregiver. I was going over there at least 2-3 times a week, and at some points, when he'd slip on the ice again or have another episode, I was there 7 days a week. But I was grocery shop for him, helping him bathing, helping him, go to doctor appointments, cleaning the house. I could no longer coach my kids in sports. I had to kind of drop that off. Because it killed my dad. I know it did. But this is why people buy long-term care, is to avoid burdening their children. Third reason is protection of assets. Yeah, as long as I've worked hard, I got the stuff in the bank. I'd like to see my kids get it. So keep that in perspective as you're talking to people. It's choice, and I always sold on choice and independence. And I told that story again about adult children becoming caregivers and the fact that they can't be parents anymore, and that being a baby boomer where you have kids that have demands at school, and especially with COVID, you're as a parent. I've got 3 that. Doing their homework online has gotten to be a real burden with them. I have to spend time with them, making sure they get their stuff done. And then taking care of a parent on top of that. You're getting that sandwich where you're getting it in both ends. So avoid burdening the children and, having that choice. That's what I sold on. I rarely sold on the asset part of it. That's that real hard-hitting family stuff. It's the emotional part of the sale, which I think you should concentrate on, because that's what really worries people. So this is why people buy long-term care. Choice, avoid burdening, and protection of assets. And again, it's especially with COVID right now. I touched on this. By the way, we're getting close to wrapping up here, and I'll turn it over to questions. But let's plan on keeping you out of the nursing home. When you do a long-term care plan, I can't guarantee them they're not going to go to the nursing home. No one's going to say that. I don't want you to say that. I don't want you to hear me saying that right now. But I'm going to put a plan together that's going to give them the most ammunition possible to keep them away from that. Because long-term care does have all levels of care. It does care for everything we can do. So, and after I go through choice, independence, what would be your reason for buying it? I'll stop there and ask them, what's motivating you for me sitting here with you right now? Is it because you want a choice? Yeah, well, I'd ask them, I'd stop and let them speak at this point, because this is a big emotional slide. Remember a couple slides ago here, this is the whole emotional choice, independence, avoid, and then you hit them with this one. What would be your reason? And they'll tell you, yeah, I can't burden my kids. You know what? My kids are so, people are proud of their kids, right? They work full-time jobs. My daughter, works as a nurse, then she's volunteers over here. And, my son, he's busy with his job. He volunteers at the church. And so, or they'll just tell you, yeah, I don't have any faith in our system anymore. Or you know what? Maybe they'll just tell you, yeah, I would like to see my kids get my house. I don't want to lose all this to the state. So this is another area to pause. Let them tell you. They're going to tell you what's more important right here at this presentation. They'll tell you that staying at home is really paramount to them. They really hate the idea of a nursing home. So maybe I'm really going to emphasize the home care of a plan. Maybe they're telling you that, I'm worried about, I don't know. I got no reason to not be at home. There's no one here. It's just me. And, I don't care if I go to a facility. So maybe, you're going to emphasize the facility side more, not worry about the home care as much. So you want to listen to what they're saying here. All right. So then I just tell them, look, it's your choice. Long-term care, we've heard the examples of, you can buy something for, very inexpensive, $30, $40 a month. Matter of fact, I'll use a Mark Randall again. At this point, he'd say, look, let me ask you something. If I told you I could sell you a long-term care plan for something around $25 a month, could you afford that? Of course, the person said, yeah, I can afford that. So if I told you I could design something that's $500 a month, can you afford that? I would say, no, I can't. Would you agree you could afford something in between there? So this slide here, we can do a plan that's designed completely on price or on benefits or anywhere in between. Okay. You can be extremely flexible and just go. And as a matter of fact, I'm going to just go to the software for a brief second when we're done here, just to kind of show you some ideas. But okay. So what we're doing here is we want to keep you out of the nursing home, right? That's the idea. Matter of fact, I would try to change the order of this slider here, put this one right there. We actually just added this because of COVID. So I would put it right in between there. So we could have one that pays cash, right? That has day one, no restrictions, so you can pay family members and friends. We talk about the progression of care here. So I really want to set the table for them understanding that, the long-term care thing is normally, remember the slide earlier that 85% of care, is that done at home? Well, that's the normal progression. So dad has a stroke. It's a mild stroke. For the most part, mom can help him out. She can help him, get out of bed in the morning and help, make him some dinner, make him some eggs in the morning, or, feed him at night, help him, get into the living room. So this is the progression of care. This is the family and friends. Families rally around to try to keep a loved one in the home for as long as they can. That's just a normal flow of things. Maybe it's the kids coming over a couple times a week to help mom and dad. Maybe mom can't do it all, so the kids also pitch in to help out. And I'm just going to pause here again because we do lead with Mutual Omaha, and they have that cash benefit, which is so big because then you're able to pay the family and friends. Because that 3 out of 4 people receiving care at home depend exclusively on family and friends. And that, my friends, without cash, you can't pay them. So that's an important part of Mutual. We can come back to that. But so this is progression. We start at home. We have, again, a combination of maybe a nurse coming out, but mainly it's the family that are stepping in. 80% of people needing care receive it from unpaid caregivers. Again, 3 to 4, there's mostly family members there. Okay. So then at some point, we don't want to go to a facility. So when your family members maybe can't, we can have that therapeutic nurse coming out. Maybe we put a medical alert system and then we modify the home. We're going to turn your house into a place of care. So the policies we have, the long-term care policies, can do things like, pay for a medical alert system, widen your door frames, put handicap accessible railings in your bathroom. We can put a wheelchair ramp coming into your house. There's money available in these long-term care plans. So again, paying family member and friends, paying to take care of you at home, also modifying your house, turn your house that place of care if we can. Okay. And at some point, maybe that's just at some point we have to face the music that dad just needs to go to a facility, right? Well, then we want to cover that as well. So assisted living facilities, congregate care facilities, Alzheimer's cares, personal care homes. I'm going to just pause one last time, and I promise we're just wrapping up here. So this category here, when I started selling long-term care, this probably dates me, but we didn't have any of that stuff. We had nursing home or home health care. Why do the policies only cover nursing home? And because assisted livings and congregate care and Alzheimer's care, these didn't exist 15, 20 years ago. But I'll tell you what the policies have now. They have what's called an alternative plan, an alternative benefit inside the policies. The good ones do. Mutual Omaha, for example, which means that an alternative plan of care says that if there's some new facility that's coming down the road, that maybe because again, we didn't have assisted living, so there wasn't. So now it says alternative plan of care says I don't care what they're calling the care facility, as long as it's licensed with the state. The policies of today are going to cover that. So this category could be another 4 bullet points. It's all going to be covered by today's policies because they're adaptable to the new care that's coming. Okay, so that's kind of a big point there. So the next levels before nursing home was any of these options: private living, assisted living, private and apartment, etc. Also, okay, and then of course finally the nursing home, right? Covers all levels of care, Alzheimer's. A long-term care plan is going to cover all 4 levels of care, right? And so we can help design that. So at this point, let's look at a plan for them. Okay, so that's kind of the presentation. All right. So I'm just going to, again, so what do you do when you're designing one? And I was just spending 30 seconds. Less is more. I'm just going to say this, and I brought this software up just because this is one I was actually just quoting earlier today, a couple that was 63 and 58 from Ohio. Notice what I was kind of starting with here. A $3,900 a month benefit, $128,000. And I don't even have any inflation with this one. And this is the first look at it. Now, I know those of you are saying, well, Jeff, you just told me the care can be as much as, I don't know, $50,000 a year. Isn't that going to be at least $5,000 a month or $4,500 a month? Yeah, it is. And when I tell people, if you want to sell long-term care in this day and age, because it used to be a lot cheaper, the prices have went up as they've gotten more claims experience. So with a new pricing of long-term care, we still want to sell some because I believe that some benefits better than nothing. I ask people about their income. Do you have a pension? Do you have Social Security? So if the nursing home is going to charge you, $6,700 a month, how much of that can you afford to pay without having to crack into your interest or your principal on your investments? Or in other words, if this policy paid the first $3,900, could you afford $2,400 without going into your nest egg? Yeah, I think I could. So we're really designing things that are going to subsidize that whole amount to try to keep premiums more affordable, frankly. So this premium I pitched these folks, it was, $992 for him. Now I can start with maybe adding inflation there. I'll put a little bit in there, maybe just tell them that, look, if we were to add just a little bit of inflation there, that premium went from 2,400 to 28, so it's going to grow a little bit, or maybe 1.5. So I always wanted to show a low amount just to kind of get them to bite, because today we have to be more creative with today's rate structures of the carriers. So I'm a big believer in a little higher amounts sometimes and a little lower inflation. So anyways, if you have a case like that, we here, the marketers, will help you with that. So I want to thank you guys for coming on board. I know it's 2:45. I think it's been, 44 minutes. I think that's what we were allowed for today. I want to keep it to that. So I want to really just thank you for coming on board today. Yeah, there's a lot of stuff on the internet. There's a lot of ways. Keep learning, I would say. There's a lot of stuff, a lot of pointers, a lot of tips out there. But do know that these recording or these webinars that we do are recorded. And we have, if you don't want to listen to my voice, whenever I listen to my own presentations, I always want to puke. Who likes the sound of their own voice? But there are presentations that Tom Randall has done, or John Randall, or the rest of our marketing team have done. I'm sure Jen Felton's probably still in some of those. Much better voices than I have, but they cover these things in a different way. In other words, how they're going to cover this slide or this particular thing. So I do suggest that you go to goldencareagent.com there and check out some of our pre-recorded webinars, such as this one, just to get a different take on things. But that's my take for what it's worth. Let me look quick if we have some questions, and we'll let you guys get out of here. Wow, we grew for even 10 more people here after we started. So thanks a lot. What a big class today. Big thank you for coming on board, everyone. I sincerely, on behalf of GoldenCare, I just want to thank you guys for coming on board. Okay. All right. Good. Lynn, you scared me. You said there's an audio problem, but fortunately that must have worked itself out. Yes. One question, is it being recorded? Yes, it is. There's another person asking if a copy of this will be sent to them because they had some of these slides, but not all of them. Yes, we will be sending a copy of this presentation out. Thanks for that, Fred. And Darlene, yes, we'll be sending a copy of this out. So there's another question about the diagnostic related groups. And I always hate to get too deep in the weeds and some of that stuff because, man, it is really tough. It's good stuff. It shows your client that you really know what you're talking about. The question here, Darlene, maybe we can talk to you on another basis here, but hospitals sometimes have you in observation versus if you're checked in, and so all this stuff is billed differently. Yeah, that's another topic there, but certainly it's good to know that. What's the other private category? Other things are privately funded. Maybe it's one of these. He's asking that one slide. What was the 3% of the other people who paid for it? There's these prepaid like apartment complexes they have now, right? Or these where you have you're all in your care, your rent, your condo. You prepay X amount of dollars, and it's kind of your mortgage, but they're kind of like living facilities that have all levels of care, from home care to assisted. That's part of it. The other was. What else do we have here? This has been thank you, Ray. Said he really enjoyed the presentation. I appreciate that. Okay, another person here is, the Mutual Omaha benefits did cut their cash benefit down. Yeah, from 40% back to 25%. What I would say to that is, here's what I've done on that situation is I've increased my monthly amount. So instead of selling a $4,000 a monthly benefit for maybe a 4-year plan, I'll sell a $6,000 benefit for a 2-year plan. I'll shorten and fatten it, and that way I'm getting the same premium. Actually, I'll use a little less inflation, but that way I'm jacking that cash back up to 25% of 4,000 was only $1,000. 40% of it was $1,600. So if I move that monthly amount back up to like $6,000, well, now I'm getting 25% of that, or I'm getting $1,500 back where I was. So you got to be a little more creative with that, Randy, to get the premiums or the cash to be. But you can still get there. You can actually make the rates for Mutual Omaha now, if you kind of tweak it, I can give you the same benefit components, just doing it a little bit differently and not have so much of a rate increase or eliminate most of that rate increase. So you can still kind of design a plan the way it was before. You have to be more creative. Give me a call. I'm happy to show you that. Okay. This presentation can be personalized. You can put your photo in there. We have many agents that do that. The first slide is like themselves with their family, but certainly that can be done. Another question about which carriers have reimbursement, which is indemnity. I can tell you that Transamerica, who is now getting out of the business, was another one that had cash. Other than that, Mutual was the only one now. So there's not many carriers left, and Mutual definitely leads the way in that area. Okay, so that kind of wraps up the questions I have here. So I want to thank you guys for coming on board. The main thing is, folks, if you have a case, matter of fact, it's just, it's almost like this was set up. Thanks, Alan, for this question, because I was just about to say, here's the thing. if you're newer to long-term care, lean on our office. Lean as marketers here. I don't get to be in the field. I like when an agent calls me and says, "Here's what I got. I got a 63 and 58-year-old." I love kind of selling vicariously through my agents. So give us a call. I know John Randall will help you out. Lynn Voss and myself, Chris Paulson. We would love to be able to help you. Just kind of go over the case that you're working on with me. Tell me what you got. I got a 61-year-old lady with osteoporosis, no compression fractures, but what can we get? We'll search the underwriting guides. We'll find that right plan. We'll help you design it. We'll make you look real good and give you the product. If you're not licensed, we'll set you up with it, get you good commission. So let us kind of help you this area. That's what we do. So if you have a case, a prospect, you're not sure what to do with it, I strongly suggest you give us a call at the marketing office and we'll put something together for you. We'll help you close that case. We've got everything from nursing home full comprehensive plans all the way down to home care only to true freedom. So no matter what you bring us, we have a plan for them. Okay. So I'm also doing a couple of thank yous. Very, very, very much you're welcome to everyone that came on board. Big class today. I want to say from the bottom of my heart, honestly, thank you so much, you guys, for coming on board. What a big class. And please take in mind what I mentioned about Corona. Your clients are waiting to hear something about this. So dust off your long-term care books or your long-term care client list and give them a call because they need you right now. Okay? All right. I'm going to go ahead and close this up. 800-842-7799 is our number if you need us. Thanks a lot for coming on board, and good luck selling.
Check out our website, GoldenCareAgent.com, or give us a call at 800-842-7799.